You can see.
Minimize that. Move you out the way. Okay. Appreciate y'all patience. We are going to get started. We're going to get started with one of our favorite vendor partners, Josh Whitaker from Whitaker and Hamer.
Sure. All right.
You don't have to do anything with the computer if you don't want to.
Okay.
It's recording.
All right. I can stand here and people can see me.
Absolutely.
Okay. Well, if I haven't met you before, my name is Josh Whitaker. I'm a lawyer over here at Whitaker and Hamer. We do a lot of closings for folks. We're business lawyers. We handle family law. We have our folks who do criminal law, personal injury. So there's 11 of us spread out over 7 offices. So we cover most of the state. But I'm here today to talk a little bit about business law and specifically incorporating as a corporation, organizing as an LLC, what a sole proprietorship is versus a DBA, things like that. Everything I have to talk about is pretty boring, right? For the grand scheme of things, you know, if you're just getting started out, you might have some questions about how to organize, how to get started, what's the best avenue to go. The people behind me, the financial folks and the accountant, they're the ones that are going to answer probably all the exciting questions that maybe you have. So I'm happy to answer questions while I'm here. I can just talk in general about LLCs and corporations and sole proprietorships, but that never seems to be super exciting. So if anybody has any questions about how to get set up, if you just started and you have questions about how you should set up your business, protecting yourself from liability, getting sued, I always tell people, I've been doing this for 20 some years now. And so I always see the worst case situations, right? Like, I've seen the real estate agent who didn't disclose that, usually if you're going through a transaction, there's usually a mortgage lender involved, and a mortgage lender is always going to check to make sure property, if it's in a flood zone, a flood hazard area. I've seen them where there were cash transactions, and so that kind of fell to the real estate agent to kind of get that information out there, and it wasn't disclosed, and these people bought it, figured out after closing that they were in a flood hazard area, and there was a lawsuit that, not disclosing things, and when you get sued for that kind of thing, if you're not set up properly as an LLC or a corporation, when people sue you for that kind of thing, they get to your personal assets, they get to your house, they get to your car, they get to your bank accounts. And so being set up correctly is important to shield you from liability. Yes, ma'am.
Is there one that's better between the LLC and
I find that usually, unless you've got something odd going on, an LLC is probably the easiest. There's not really a lot of maintenance requirements. If you're a corporation, you're supposed to have an annual meeting, even if it's just yourself, and there's certain things you have to document. The LLC gives you the same liability protection, but you really don't have to do anything annually. So there's less upkeep. So the LLC is a little easier when we have a choice.
Josh, I have a question. When you talk about real estate agents, which most of us are in here, in regards to KW Platinum, as an agent, as a buyer's agent, the buyer hires KW Platinum, right? They hire KW Platinum. We're the agent of the firm. So when there's a lawsuit that is brought about that particular agent, with KW Platinum and the agent of this firm, where does that lawsuit end up? Are they really suing KW Platinum, or is it the individual agent of KW Platinum?
And the answer to that question is it depends. I think for most ones that you normally see, breach of contract, negligence, things like that, that an agent would be getting sued for, usually that's probably going to stop with Keller Williams Platinum. But if you get to the point where they're suing for fraud or misrepresentation, right? You didn't tell them, so you didn't disclose something you should disclose. When you get into that arena, a lot of times they're going to be coming after you personally. Those are torts like fraud and things like that. And so when you get into that realm, they try to, we call it piercing the corporate veil. Yeah. Right. So they try to get through the corporate veil, the protection you have with Keller Williams Platinum, and come after you personally. But usually you have to have done something. You're a real bad guy, right? You've done something that's fraudulent. You tried to hide something. Right. You've done something above and beyond just simple negligence, if that makes sense.
Would they try to, in that case, that would be willful, not necessarily you didn't know, but you willfully knew.
That's right. You've done something.
Yes. It's an intention.
Right. Now.
Yeah.
And so even if, yes, that's 100% correct. But the other side may include, you may still be involved in the lawsuit until discovery brings out all the facts, right? So the other side may think that you willfully did something. You'd be included personally in that lawsuit if you act in your personal capacity, if you're not also behind an LLC or something like that. Right. So you may still be involved in something until all the facts come out. But yes, you shouldn't be liable unless you've done something. Simple negligence is not enough. Just missing something by accident is not enough. Breach of contract is not enough. It has to be something over and above.
Right.
I like your word willful.
Yeah, and so in that case, it would really fall at the KW Platinum level, whereas E&O would come into play at that point.
That's right.
Okay.
Yeah. Just for the normal everyday type of negligence. I always forget you're a Clemson fan. You must be pretty happy.
I saw it well last night.
Yep. But yeah, so do you have a question?
No.
Okay. But that's where I come into play when things go wrong. And so I would recommend everybody, once you get started, the cost of an LLC is not, the cost of getting organized, the cost of getting incorporated, getting everything set up right out of the gate is not, it's usually under 1,000. Sometimes it can be even, under 500, depending on what you're trying to do. But getting set up correctly out of the gate is important, you know, but, anybody have any specific questions or concerns?
And Josh, your form could help any of our folks here getting set up, correct?
Yeah, you can always just give me a call or shoot me an email if you do have questions or you do want to talk about going and getting set up correctly. It's not hard to do.
At what point should an agent look at forming an LLC and then if you have to have an LLC to get a firm license, whether you're trying to use that firm license for advertising or not?
So every time I talk to somebody at the real estate commission, I seem to get a slightly different answer because we've helped people with that. We've done it. You know, we have, my wife has a brokerage and we went through the whole rigmarole because she wanted to be able to advertise with that name. And so it's my opinion, unless you guys know something different, what I found out having to do it is that, yeah, to use your name, your LLC name in advertising, you need to get it approved with the real estate commission as an approved firm. Unless you run into something different, and that's kind of what we ran into. And there's a process for it. It's not that difficult to get your firm approved with the real estate commission.
And then also like when you're getting that firm approved, even if you don't want to advertise with it, you still have to apply for a firm license for to collect money.
Yeah.
That LLC, right?
Right, to get that LLC. If you want your commissions paid to that LLC, which you probably do, if you're going through the trouble of organizing one, you have to get that firm license. Keller Williams won't pay your LLC unless it's approved with the real estate commission. Hold on, did you?
Yeah, I thought we're supposed to report something quarterly on LLC, under LLCs, not right?
So there's some tax reporting that you can do. Secretary of State requires you to re-up annually. I don't know if that's what you're asking. And then you can, like your personal taxes, if you want to, you can do that quarterly. Is that what you're asking?
So you're referring to personal taxes or referring to those prepaid vouchers or just, because that's what I heard, under LLC, you have to report quarterly. I don't know what those reporting is about.
I don't think you, unless our accountant knows better than me.
Yeah, I can answer that for you. It's basically what you're talking about, is your quarterly estimated taxes that you're doing.
Just that.
Yes, that's
Oh,
what you're
because
doing.
I thought there's a separate one that's reporting on the related.
No, but if you have your tax return prepared by an accountant, they'll print out vouchers for you for each 4 times of the year.
Yeah, that's what I know.
Yeah.
But you don't have to do that. That's probably good practice.
It's good practice, but you do not, it's not required, no.
On LLC.
Yes.
Oh.
It's good practice to prepay your taxes so you don't get hit with it at the end of this, and that's never fun. You know, you hear those people that always say if everybody had to pay their taxes as a check at the end of the year, like it'd be like a civil war, you know, people actually saw, and you didn't see until you're self-employed, you don't really understand, or I didn't, right? I didn't really think about how much I was paying in taxes until I had to stroke that check at the end of the year. But
Are there any differences in the liabilities between a true LLC and a single member LLC?
should be the same.
For clients that have rental property, do you typically recommend they put that in an LLC?
I do, yeah. If you have a client that has investment property, and I have a client that owns, he must own like 40 homes, and he's owned 40 homes for 40 years. And he's always done it in his personal name, and there's nothing I can tell him that's going to make him change. And he's gone 40 years and never had a problem. He's never had a tenant sue him. He's never had any insurance claims. He's been fine. I think he's the exception to the rule. Most people, if you're going to rent it out, you need to put it in an LLC. And then if you own enough property, we start talking about separating your investment property into commercial, residential, risky, right? So we own some commercial buildings. I have them in different LLCs because we have equity in them, right? So if someone sues you and you got 5 buildings in an LLC, they could get to all the buildings in your LLC, right? So we start separating things out. Like I own a bar, which I consider a risky thing to own, and so that's way over there by itself in its own LLC. I don't have to pay attorney's fees, right? So I can separate things out as much as I want to. But there is yes, if you're going to have anybody in that house that's not your family, I put it in an LLC and try to minimize risk. Because as soon as you don't, that's when somebody's going to fall down the stairs and die. You're going to get sued for a wrongful death. And
Yeah, and I've seen it where an investor would have, if they had, say, 30 different properties, they would have 30 different LLCs. They'd have a single LLC for every single property.
And we have some clients who deal in cash and they never have mortgages. So if they buy a $500,000 house, they have $500,000 in equity right away. And so we try to protect that. You know, if you've got 3 houses that are mortgaged up to 90%, we might group those together to save you some burden.
Yeah.
And you can stack things too. So there could be like one LLC that's in charge of all the other LLC. You can get as complicated or not complicated as you want, but somebody else had a hand up. Yes, sir.
Oh, if someone wants to buy like under the LLC, but they're the owner of it, but they have bad credit, but the LLC has like, everything is good, they have good credit, is there any way? A lot of things.
So a lot of lenders won't lend to your LLC. Right? So even if your LLC is good and a lot of lenders won't lend to an LLC. You have to go to the North State banks, the Fidelity banks. There's certain banks that will loan on commercial property or investment property and let it stay in an LLC's name. And those are usually different types of loans. Those are like 5-10-year loans. If you want the 30-year mortgage, you usually have to do that in your personal name and then talk to me about moving it over to an LLC. But usually most LLCs are judged on your credit. So like if my credit's not good and I started an LLC, my LLC is not going to have good credit because they're always going to look through to the owner to lend money. It's different for other things, but to lend money to do some sort of mortgage, they're usually going to look through to the owners. But you can still, there's still workarounds, but that's generally how that works.
Workaround when that's commercial loan.
Yeah, the commercial loans, they're tough right now.
Yes.
It's tougher than the residential market, and commercial loans usually want you to put down 40%.
Yeah.
And they're shorter turnarounds, and they have 5-year calls, and they have all this other stuff going on, but sometimes they make sense.
We're coming up to the end of a 5-year clause right now, so this is gonna be interesting in the commercial market.
I've got one that comes up in August. One of our buildings comes up in August, and I'm hoping the rates go down a little bit, you know, before they call it in. Anyway, I feel like I rambled. Any other questions or concerns about anything before we get the real folks that you probably want to talk to up here? All right, well, I'll be over here on the side if anybody has a question or anything comes up.
Thank you so much, Josh. Susan, we've got you next. If you want. Change, and I did get those printouts. I'll get them.
Good afternoon, everyone. My name is Susan Cassano, and I am an accountant. Basically, I have my own firm. A little bit about me, I've been in the corporate accounting world since 1985. Actually had my very first job being a billing clerk, an AP clerk, that kind of thing. And I kind of evolved over the decades, and then just evolved into being a CFO in a corporation. Kind of got tired of the corporate world and basically said, oh, I'm gonna do this. Like, I basically got burnt out from working too many hours. And I have my own firm about 2 years ago. So I basically take all my knowledge, all my experience and everything that I've had over that time, and I utilize it now. And what I really, really love is working with small businesses and sole proprietors, kind of the smaller people, and just helping them navigate the tax world, accounting, you know, just basically doing what's best for their companies, doing some help with their budgeting and cash flow forecasting and all that kind of stuff. And basically just keeping up with organizing their companies and how they want to structure them, and then what's the best way to do for taxes. And, you know, everyone has to pay taxes, you know, today, right? So to mitigate some ways of reducing their tax liability, that's basically what I kind of do. And I sit and I consult and I, you know, explain everything to people and just figure out different ways that they can do to kind of lower their tax burden, which is always, you know, something, you know. But I did some handouts here, and it's, you know, basic accounting, you know, what's the best practices to do when you're, you know, accounting. The most important thing is really keeping these accurate records, you know, just keeping yourself organized, keeping yourself going. You know, you want to look at something, you know, you talked about applying for mortgages, applying for some kind of loans and stuff. the first thing they're gonna ask you for is your financial statements. You know, you need a balance sheet, an income statement. You're basically gonna wanna know, you're gonna know that, you know, how profitable your business is being and, you know, what you're doing. So that's gonna be the first thing a banker is always gonna ask you for. So staying on top of that kind of stuff is, you know, very important. The best thing to do is kind of using bookkeeping software, you know, QuickBooks. I know everybody has heard of that in this room. But there's, you know, you can do as simple as an Excel spreadsheet. You don't really need to pay for, you know, bookkeeping software. Just as long as you keep it, you're tracking your income, you're tracking your expenses and that kind of stuff. You know, and then, you know, organizing your receipts, kind of keeping all that kind of stuff. You know, that horrible word audit that might ever come into your life. They're gonna be asking for receipts, and like QuickBooks offers an amazing thing where you can just take a picture of your receipt, upload it to the, you know, the bill or the invoice or whatever the expense that it is, and you'll have it right there at your fingertips if you ever need it. So, you know, it's kind of like on organization and kind of thing. Chart of accounts, which is basically your GL codes, which is, you know, your income, you know, accounts, your expense accounts, your equity accounts, you know, in a balance sheet, it's, you know, your income, it's your expenses and your equity, kind of like what makes up a balance sheet. So, you know, keeping your chart of accounts and keeping it in line for what the kind of business that you are, the kind of industry. I mean, everyone in here is a real estate. So you want to kind of keep that in line of, you know, what you're, you know, as a truck driver might want to look at something different with their GL codes and their chart of accounts as opposed to a real estate agent. So, and then also being a sole proprietor, or you can be an LLC, an S Corp or a C Corp. And then you kind of like want to align your chart of accounts, just to keep in, you know, in tune with what you're doing, what your business is doing. I can't stress this enough as an accountant, is keeping your business and your personal expenses separate. Completely separate, you know, your business over here, your personal is over here. I know we got in the subject of LLCs and S Corps before, but if you're an LLC, you can kind of, it's okay to kind of commingle some of your personal stuff, put it in with your business, it's not gonna hurt. I mean, ideally, it's, you know, better if you keep it on both sides of the fence there. But if you decide, you know, you want to be an S Corp, which I can go into more on the benefits and everything of that, but as an S Corp, there is no way of commingling, there's no reason of keeping personal and business expenses together, or you always have to keep them separate. There's that hard line in the sand when it comes to being an S Corp, when you're personal in your business, and there's no kind of going around. The other thing is kind of keeping bank accounts. Definitely have a business bank account. You want to have a business, you have your personal, and I always recommend having a bank account within the same bank that you bank with your personal, because then you can easily go online. And if you have to pull money from your business, put it in your personal, it's just an easy transfer and you're done, and you know, you can go. I have clients that have banks, you know, all over the place, and then it's like, you know, oh, I gotta get my money from this bank and I gotta get over here, and it takes 48 hours, and then, oh my goodness, you know, things will bounce. And so I always recommend just keeping a bank account within the same bank that you bank with personally. And you can kind of thing. Reconciling your bank accounts and your credit cards is, you know, very important. I would recommend doing that every month, because then you would rather knowing that everything that you're writing, everything expenses coming through your business is there, and you're recognizing, you know, what happens if you wrote a check to so-and-so, whatever, and it hasn't cleared your bank, right? But you're gonna want to have it in your bookkeeping software, because then, yeah, you know, and you'll know what your balance is in your bank account. It's just making sure that you're recognizing every single expense that's coming through, you know, coming through your business. So that's kind of important. Staying compliant, you know, which is basically the tax word. Making sure if you have sales tax, which I don't think anybody in this room would ever have a need to do sales tax. But if you have sales tax, it's very important to keep track of it. You know, how many clients that I've had that I've come across and say, well, what do you mean I have to pay sales tax? I thought that money was mine. And I'm like, no, if you collect sales tax, you're basically a pass-through. You have to take that money and remit it to the Department of Revenue. So I had a client come up and say, well, I don't have enough money in my bank account to pay that. And I'm like, well, all right, well, we'll go into another whole topic. But anyway, estimated tax statements, which I know the woman over here kind of talked about, was questioning. That's basically, you know, if you want to pay taxes, it's not required, you don't have to, but I recommend, because, you know, you make $100,000 in the year, you got all these profits, and then you made no tax payments all year long. The IRS is going to be like, wait a minute, I didn't get my money and you didn't pay me anything. they will charge you a fee. They have as a penalty, and then there's interest and all this other kind of stuff. So I always recommend if you're like a high earner, you make, this money, I would not wait until the end of the year, and then when you file your taxes and your accountant turns around and be like, well, you owe $40,000 to the IRS, and wait a minute, and so there's penalties involved, there's interest involved in that, IRS does not like that, as an employee, you get a paycheck, right? And you have your taxes and everything taken out, the IRS gets their fair share of your income as you're making it. They get it, bi-weekly, monthly, semi-monthly, something like that. So as a small business owner, you're not having taxes taken out of your paychecks or anything, you're basically responsible. So that, making estimated tax payments is kind of important. If you work with an accountant, that accountant should be able to kind of gauge and forecast and look at, all right, well, based on trends, what you made in the past years, to kind of say, well, this is what you're gonna end up paying, this is what you need to pay. They'll hand you a voucher and they say, all right, and then it's April, it's July, it's September, and then it's January is the dates that are within there you have to make your estimated payments. So I know I'm rambling on a lot about all this kind of stuff. Does anybody have any questions? I can take a minute break here and before I go on with more. Go ahead.
So I'm new to real estate, but I do know that I do want to create an LLC in the future. So as far as taxes concerned, like this year when I do my taxes, I wasn't a real estate last year, so it's just my regular job.
Okay.
Taxes. But when I do create the LLC, would you say that I find an accountant to work with personally so that each year when I do my taxes, things go smoothly?
I would highly recommend, especially because there is things that an accountant will know or a tax or CPA will know that you're not going to necessarily be privy to or not know, there's tax loopholes, there's things that you are able to deduct. The main thing is like a lot of people don't know that you can take away your internet in your home. I mean, obviously you have a home office, right? So you're gonna have a home office deduction, which is basically any direct expenses that are contributed to your home where you live. There's a percentage of that. There is internet that is 100% write-off, because obviously you need internet to do. Your cell phone is also another 100% that's a write-off, you put in. And what you do is a Schedule C. Yeah.
No, go ahead.
Yeah.
I have another question on top of that. I'm just bringing it up.
All right, but you have a Schedule C within your personal return. So an LLC is kind of like a pass-through. You basically you're making your income, whatever, and it just passes on. You do the Schedule C within your 1040 on your personal return, and it's not a separate thing like being an S corp or a C corp or something like that. So
all of those deductions you just said you have to have an LLC. Like I work from home for the
No.
past 2-3 years.
no,
So,
being a sole proproprietor, yeah, you don't.
it's my day job.
Okay. All right, so if you work from home and you have a day job, it's a W-2, like you get a then no, that's the beauty. If you're a W-2 employee, you can't deduct anything. I mean, you are, but if you have an LLC or even just being a sole proprietor and you're a 1099 person that gets a 1099 every year, then you have more leeway, you have more ways of deducting things and that kind of stuff, so.
Thank you.
But yeah, W-2 earners, there is nothing. You can't even write off the miles, if you go. I have a example, so I have an insurance agent that she did 52,000 miles in a year on her personal car. And she was like completely floored, like, I said, no, you can't write off the mileage. Wait a minute, I thought I was allowed to. I said, nope, if you were a 1099 or a business owner or that kind of thing, then yeah, that's all, but you're a W-2, that is not allowed. That's something that you have to do between your employer and yourself, and then not, be able to do, that's an awful lot of miles to put on your personal car, and then for the beauty of that, so.
And I just wanted to tag on her question.
Yeah.
She mentioned finding a professional. You guys don't have to find anybody. Susan is definitely qualified, so
Yeah.
is Josh and Kevin, and they've invested enough and come to share this information. So if you need somebody in these roles, please do reach out to these professionals.
Thank you. Yeah.
Sorry, I just had a follow-up question about the W-2 question. So what if you're a W-2 employee, but you also have a LLC? Are
Okay,
you
well,
able to write off?
you are, as long as you do with the Schedule C.
Separate.
Yes, as long as you do under your Schedule C within your personal return for your LLC, then yes.
Okay.
Yeah, you're able to do that.
I'm definitely gonna be calling you.
All right.
I think she had her hand up first.
Yeah, I kind of looked over and saw the both of you, but go ahead.
Oh, I was gonna ask, I was reading something about a section 179.
Yep.
So I know that there's a part in there that speaks about vehicles over 6,000 pounds, but there's also something about vehicles under. Can you
All right.
help me understand?
I can. So section 179 is a depreciation method that you take the entire expense of whatever you have. So you have an asset, right? And you buy a vehicle, but I'm also gonna go on to a tangent. If you're an LLC, you can't have the vehicle in your company and write off. The only thing you can write off on that is your mileage.
But you can do it on your personal tax.
Yes, yes, but, so depreciation is, so section 170, I'll go back to that. That's just taking your value of your asset and writing it off 100%. I will advise to do a section 179 if you don't think you're gonna have profits, major profits the next couple of years, right? So if you're, you have all these profits and you're trying to mitigate that tax liability and trying to reduce your taxable income, I would take whatever assets that you're purchasing, you're putting it on your fixed asset schedule, and then doing a section 179, which is 100% depreciation. You take that full value of that asset and you get to deduct it in that tax year. Depreciation methods, though, kind of benefit you over the next few years, where if you buy something that's 3, 5, 7, 10, 30 years, it all depends on the asset that you're having, right? You can depreciate that over X amount of years, depending on that product that you're buying. But if you do the section 179, that's it, one and done, you get to do it that year. The next year you have it, and I'm like, oh, wait a minute, I still have this asset, I still have it in use, but you will not be able to use any kind of depreciation because you took the full value of that depreciation and put it on that asset,
So it sounds like it's better to do it over time, kind of like how businesses have a depreciation GL.
Yeah,
So with that being said, how do you know, do you just split it up?
it's kind of like you talk with your accountant is the best thing
Okay.
to advise you on that and kind of looking like, all right, so, I mean, I know you guys are all real estate agents, right? So you don't know, you can make $100,000 this year and the way the market is going, next year you're gonna make nothing, you're not gonna be able to sell anything, right? So I know, it's like, I'm not saying that you're gonna do that, but I just trying to do worst case scenario, right? But, so if you do the depreciation, the full depreciation in the year that you're making all this money, and then next year, yeah, it's gonna be beneficial for you to do that, to be able to. But if you kind of put it over time, you take a chunk, so it's usually like office equipment or office furniture, anything you buy for your home office at home is a fixed asset, it's something you can depreciate. A computer,
Printer.
yeah, a printer, anything that's basically you can do, yeah, so you take that. But I wouldn't advise, so I'm gonna get into another whole subject here, I would not advise to depreciate an asset that is under $2,500. $2,500 or under, I would just strictly put it into your office supply category and you just expense it then.
Does that include vehicles? Like the value of it?
Yeah, I mean, if you buy a really cheap vehicle, I mean, I don't know who can buy a vehicle for $2,500, but
Oh, you said 2,500, I'm sorry.
yeah, but I'm just thinking, but yeah, maybe, I don't know, I mean.
Yeah.
30 years
Now,
ago,
do you have to have purchased it that year, or can it be something you already own, using it for your business?
Yeah, I mean, if you put the vehicle, you have it in your personal name, and then you can put it over into the business name, then yeah, you can start depreciation basically, because you're kind of buying it. The business is buying it from you,
Okay,
so you can do. But if you already have a vehicle that's been sitting in your driveway for the past 5 years, and you all of a sudden, no, you can't, you'll be able to just start doing depreciation. The business would have to buy it from you.
and you also wouldn't be able to do the section 179?
No,
Okay, so it has to be a purchased vehicle that year?
yeah.
Okay.
So the other subject of being why I say $2,500 or less to just expense it 100% is because whatever county that we live in, if we're in Wake County will ask you for your fixed asset listing. There is a thing called the business personal property tax return that needs to be filed by January 31st. And that's basically taking any of your assets that you are depreciating on your tax return. You're gonna put it on Wake County's business property tax return, and they're gonna want their fair share of that asset. So it's like you pay, and I can go on about taxes and how much you pay. It's like you pay taxes, you're buying something, you're paying sales tax on it, then you're gonna take it, then you're gonna pay Wake County tax just for doing it. So why I say anything under $3,000, just put it in as office supplies or some kind of, expense for that year and just expense it. It does not go on your fixed asset listing. So Wake County does not want a piece of it. It's already been expensed and it's done and, going on, so.
And they still can get a piece of it, even if it's in your personal name?
If you're listing it on your tax return, yes, they will want a piece of it. In any county around here, if you're in Johnson County or, Durham or wherever, there will be a business property tax return has got to be filed by January 31st.
So would it be just kind of more beneficial to just not depreciate it and just
Yeah.
go ahead and claim it?
Unless it's a really
Yep.
large asset, then I would say
Right.
yes.
Okay,
It's something, that's why I would say the threshold is like, 3,000. I mean, some people even want to do 5,000, anything under. It all depends on the size of the company, on the size of the business, the revenue that they're making, that kind of stuff. So,
Question.
yeah.
You can do this either as a sole proprietor and LLC or just LLC, the section 170.
You can do it as a sole proprietor, yes, you can do it, as long as you have your business, you're still in your 1099 income, right, you're not a W-2. So you're able to put a Schedule C within your 1040, and then, yeah, you can do all that stuff in there.
So if I bought a car last year, that is, I know there's a certain amount of how many pounds that would be. So that you can do the depreciation over time.
But the business needs to own that vehicle, though, it has to be in the business name, you put it on that Schedule C.
Yeah, what's the difference when you report the car, like, what they require here, like if you call the insurance company, the auto insurance, and you tell them, this is going to be under your KW, under the platinum, what's the difference?
Are you talking about the car, for insurance?
Yeah, that's different, because this one has to be under the name of the business, right?
Well, that's in depreciation methods, yeah, if you want to depreciate, that's why I'm talking to be under there, you couldn't have it as your personal name, and then all you can do then is your mileage, you can
Okay, I'm
do.
getting confused on that. If you put it under your name, on your business name, then you have to have an LLC.
Yes.
Right?
Mhm.
Because if not, you can't do it under.
No, yeah,
Proprietor, right?
yeah, that is very true, yeah. Mhm. All right, I know you had a question.
Yeah, so I want to go back to the estimated tax payments thing real quick because I hear a bunch of different things. I have my hands in a bunch of different pots and, real estate commission is my 1099, but I may not sell a house every quarter, for example.
Uh-huh.
So I'm keeping a portion of that money in the savings account for taxes. Do I actually have to pay it quarterly or can I pay it right before I file my taxes the next year to avoid those fees?
Yeah, you can pay it in January, if you can kind of keep it up. All right, yeah, you're not really sure. I mean, unless you're kind of forecasting, you're gonna kind of know, you're gonna look into your future, nobody here has a crystal ball, right? So you're really not sure what. But you can kind of, at the whole point of estimated, so, but you can, I mean, like I said, it's April, it's July, it's September, and then last one is January. So like January 24, you had to have made your final payment for 2023. But you could do that and by January 15th, and you can look back in 23 and say, all right, well, I made, $50,000 or whatever. And you would want to take, and a good number is like 15% is where you kind of want to be as far as what you're on your income, and then times that by 15% to kind of keep a savings.
So
Then you can make that payment.
here's the other question to that. So I owed taxes last year and my accountant gave me those slips to go on ahead and make the quarterly payments.
Mhm.
So if they're giving me slips with a predetermined amount, is it still the same situation where I can wait until January or do I have to try to figure out
No,
coming up with those slips?
because the slips that he gave you was based on an average of what you made that year. So, like right now we're doing 2023 taxes, right? So whatever you made in 2023, those vouchers are going to be generated from the tax software based on what you made in 23. 24, that can all change. That can completely go out the window and you can make, less money or more money or whatever. So you would kind of look, if you have a good accountant, like people will call me and be like, oh, my situation has changed. I just have a really quick calculator on my computer. I plug it in. I'd be like, all right, this is your new amount. It can be less or it can be more. It all depends on, what you're
I
doing
just don't
as
want
far.
to pay them more than I have to, but I
Yeah.
also want to try to keep the interest and, make money off.
Yeah, you might, I mean, I know there's not a whole lot in interest and savings accounts these days, but but it's still keeping in your name, keeping in your bank account instead of the IRS having it, keeping, making money in your money, so.
So the difference, if you underpay for the whole year, right?
Mhm.
The difference on the amounts, it will incur interest, right?
Yes, yes. And if you do extensions on your tax returns, always keep in mind, yeah, it's an extension to file, it's not an extension to pay. So that money that's owed, it does not continue like, all right, well, I can pay it in October. That still accrues interest, that still accrues, they still want that money, but it'll, you'll still get penalties and all that good stuff. So just always keep that in mind. But
Do you offer bookkeeping or reconciliation?
yes, I do. I'm a one-stop. I do bookkeeping, accounting, payroll, and then I do all the higher level, obviously tax prep and tax processing. But I like, what I take with my experience, that I like to do is kind of sit with business owners and look at them and say, all right, this is the best way to do it. And make some plan and make up with whatever way to save you money and keep more money in your pocket, so.
And is that something you do throughout the year or just
Yes.
when it's?
Yes, I'm not a typical accountant. I will say that I say, give me your documents, I'll see you next year.
Okay.
I like to check in with my clients. I at least do that on a quarterly basis, and I kind of be like, oh, what are you doing? What's going on? And then we'll make adjustments, we'll make some difference. Financial advisor I know is in the room here, right? So I know that's the best person to kind of talk with after, a meeting, and then being able to move money. Instead of paying more tax to Uncle Sam, you want to take the money and put it into an investment and put it into your retirement. And then that also, but that's also, it depends on how you're structured. When you're an individual or an LLC, you're limited to IRAs, whatever, individual retirement accounts, right? And was that 6,000? So I forget what the threshold is for 24. Yeah, 7,000 now. So that's it. But, we can go into the whole S Corp thing. So when you're an S Corp, there's so many more, which I know is one of my handouts here as far as the differences. And I kind of laid out very, very basic. I mean, there's so much more details in this, but I kind of just did an overview of what the difference is between an LLC and an S Corp, and then there's benefits. But like Josh said, there is so much more. There's stringent things that have to be done. You have to have minutes, you have to have board meetings, if you're one person, what are you gonna sit in the room and talk to yourself, I would say, yeah. What I recommend to my S Corp people that are one person, is kind of just write some notes and see what you did and just kind of do an overview of what you did for the year and then just document it, put it in a memo and file it away. That'll, represent what the IRS is kind of looking at, but I mean, you can kind of go down this. An LLC, is one person or it can have multiple people, it all depends. LLCs can have partnerships, it can have 5 people, 10 people, whatever. There's really not. There's more, flexibility, like I've mentioned before, as far as your taxes. You can kind of commingle your business and your personal with an LLC. It's not so bad because it's all kind of being combined into one return. It's passed through to your personal, and so it's okay. If you paid your car payment out of your LLC, you just, record it the way you're gonna record it is kind of different, but. One of the downplays of being an LLC is self-employment taxes. So you know how you work for an employer and you have your W-2 and you have your federal and your state and your social security and all that good stuff. You have all that deducted from the thing. Being an LLC, being a sole proprietor, you're not doing any of that. So what you're gonna do is that you have to pay self-employment tax, which is 15.4% of your income, of whatever your profits are. Half of that is Social Security and Medicare. Social Security is, 6.2, and Medicare is 1.9, I think. It kind of does that half as you, and then the other half you have to pay as a self-employed person. So you're kind of doing that. The only thing you can do when you're an LLC or a sole proprietor is just basically pull money from your business as an owner distribution, which I know I mentioned that in here. So you're gonna pull money from the business, you're gonna put over to your personal, and that's it. You gotta pay self-employment tax on any of that money that you pulled out. On the S Corp side, what you can be is you can actually be an employee of your business. You can actually be a W-2. You can actually set yourself under payroll. You can pay yourself a reasonable wage. It can't be anything crazy like $1 million, but you have to pay, you have your federal, you have your taxes taken out like as if you're an employee. And it's all good. And then you also have, you can go into the retirement, which I think Kevin is going to probably talk about more. You can do an SEP. You can do so many more things. A 401k plan, which I don't recommend because there's a lot of administrative costs involved in that. But you can actually funnel it all through. You can do your, if you have health insurance for your business and you're paying, then you can actually funnel that through your payroll. Reduce your gross wages, and then it saves you on payroll taxes, it's S Corp health insurance. So on the bad side about being an S Corp is that you have to file a separate tax return, and that tax return is due by March 15th. There's more costs involved in doing all that stuff. Again, hard line in the sand, personal and business, it can't commingle. You have to have the business over here and the personal over that way. You are, like I said, W-2 wages, so you can help it alleviates the self-employment tax. You can do, you have retirement and more fringe benefits when it comes to that, the health insurance. But I wouldn't recommend being an S corp, at least you have profits at least 50K or more. I mean, you really don't want to have too too little of an income, because the benefits and everything outweigh, and you just want to be more profitable, and so. All right, so I know I'm rambling again, so does anybody have any questions? Yeah.
A few more questions. If you are a sole proprietor or even under LLC, you can employ your children, right?
Yes, you can. Yes, that is definitely some of the things that I recommend, is that, you have somebody, I have a marketing client, she has a 3-year-old. I'm like, well, you could just pay her a salary. You can actually pay her up until $12,000, just pay any kind of taxes. You could take that money and funnel it over to a retirement plan or an IRA or a college fund or whatever you want to do. And there's no tax involved, and it's a deduction on your business.
Right, and another question, if you hire or outsource, like part of your, whatever, what's the requirement? Like if it's a freelance,
A subcontractor or somebody outside of, you're hiring them?
yeah, outsource internationally.
Okay.
What's the requirement?
You would have to, be able to get their I know W-9 is within the United States that you would have to ask for. So you basically need to know their name, their address, their social or their EIN. And if you pay them anything over $600 for the year, you must send them a 1099 by January 31st of the following year.
Yeah,
So
but other than like it's below that, then of course they don't.
then you don't need to worry about it. Yeah, if it's under $600, you don't need to know. Some of the things though with subcontractors is you might want to check with the Department of Labor. I know there's classifications on what they're doing, whether they need to be an employee or if they can be a subcontractor. So it all depends on the type of work that you're having them do. So somebody else had a question?
I have two for you. As an accountant, what is your favorite software to see used for tracking mileage?
Mile IQ. It's an app on your phone. It's very easy. And then you can, if you use QuickBooks Online, you can actually import Mile IQ right into QuickBooks, and it does it all. It's magic. And yeah.
Good to know. The other question I have is what distinguishes an office at home? Like, does it have to be a separate room?
That's kind of a gray area, and a really, really conservative accountant will say, no, you're not allowed. And then kind of like on the other, I'm kind of in the middle. You're using a laptop, you're sitting at your dining room table, right? You're utilizing your home. So I would just say that the dining room is your office, and that's, you're working there.
Okay.
So I would say you're able to do it.
Thank you.
So, I mean, there's other kind of things that I when I touched on the W-9s, if you have subcontractors and stuff, payroll. And if you do want to have, as an LLC, but as the owner cannot take payroll. The owner, it just takes a distribution and you pay self-employment tax. But if you hire people within your LLC, you can have payroll and pay them payroll. I highly recommend a payroll service provider. I mean, there's really, like I mentioned, there's Gusto, there's ADP and Paychex and stuff. But there's also firms like mine where we just offer accounting and payroll services, just like, they get direct deposit, they get portals to be able to log in, see their pay stubs, all that kind of stuff. But I wouldn't recommend doing it yourself because there's lots involved. There's quarterly returns, there's 941s, there's all this kind of stuff that needs to be done and filed when it comes to payroll taxes. And that is one of the things I mentioned about being compliant is that you don't want to mess with any of the Department of Revenue or anything like that. And when it comes to taxes and you can have your business shut down. You can be dissolved just for not reporting or being in compliance. I think I kind of covered. Does anybody else have any other questions or?
So what you just said is what I don't, that's with the IRS. So now that I'm doing a W-2 and, potentially a 1099, I'm trying to figure out, but with this currently being tax season, are you currently taking new customers?
Yes, I am. I actually have staff. So yes, I hired staff this year and yes, I'm able to take on more clients.
Susan, you're also a CPA, right?
Yes.
Okay.
Anybody else?
So you're the head honcho in charge. How long before you retire and you have people in place to continue?
Oh, that's my dream, right? Because I kind of, like I mentioned earlier, that the burnout of working 70, 80 hours a week at a corporation, my life was the job, was working for the man, kind of thing. Working out on my own, but yeah, that's kind of like my, I have a 10-year plan. But I can't see myself actually is not working at all. I mean, I really love what I do. I love doing this. So I'm probably just hiring more people, doing the work, and I just kind of, you know, sit back and collect the paycheck, think about anything else. And it's kind of. But, all right,
Do you have a physical office?
I do.
Okay.
It's on Glenwood Avenue, in Raleigh. 2626 Glenwood, if you want, a suite 140. I have a website, you can reach me there if you want to go, there's a contact us, and then I'll get an alert, and yeah.
Do you provide consultation?
Yes, a free consultation, yeah, people can kind of come in. Not everyone is, you know, works well together, so I always say my personality might not suit everybody, or the way I do things, or the fact that I'm from New York, you know, it's like, yeah. That no one likes the, you know, but, I'm playing a joke there, but, you know, so, everybody got, you know, it doesn't work, you know, that's what makes the world go around. So I like to sit with people and kind of talk with them. I get a feel for them, they get a feel for me. You know, I'm an accountant and you need to be able to trust me and know that I'm accountable, know that I'm talking, and you know, what I'm talking about. It's your life, it's your livelihood, it's your money, it's, you know, it's your business, you know, so you want to know that I'm reputable and that you know that I'm going to be able to do the right thing by you. And so I kind of get that. I have an hour, you know, consultation that I talk with people and kind of get, you know, ask them questions and that kind of stuff, so.
Well, I'm from New York too, so.
Oh, all right, yeah. But, all right, anybody else? All right, I kind of rambled on a lot about that stuff, but great.
Thank you.
Yeah, all right, yeah.
So we're gonna switch and Kevin's gonna come up and join us and we're gonna switch gears to financial planning. Let me get his, where did my notes go? Today. That works.
The click, so the clicker won't work at all.
I'll change the text.
Okay, that's all right.
Did you want me to copy and hand out anything?
I don't have a handout. No, thank you, though. Okay, good afternoon. I'm Kevin Cochran. I was here, I don't know, about 6 months ago, and we talked about something similar. No, we were talking about investing in rental income, so pleasure to be back. I appreciate the opportunity to come back.
Slightly different group that time, that was client.
That's true, true. Our group, we've got a small office of 6 advisors. Is that small like that? Well. There we go. Small office of 6 advisors in Apex. And Susan, I recognize she was in there. We've done some joint work together with one of the other advisors in our office. But we are fiduciaries, independent, and heavy emphasis on financial planning. So fiduciary in our business means that for our clients, if we make recommendations, all of our recommendations have to be in their best interest, not in what we can make the most money on. Okay, and that's actually a function of our license with the state of North Carolina. So we take that very seriously. We're also independent, which means we don't have any large national board of advisors or management team telling us these are the only types of investments that you can use. So we have more flexibility. There's a lot of sophisticated investments that have come out in the past 5 or 7 years that we're able to use and really help our clients. For example, they offer downside protection from a major drop in the market in a liquid investment, so not an annuity. And then we also have some that provide some accelerated growth over what the market can provide over a 3, 4, 5 year term. So just some more interesting things, and a lot of the big companies don't allow their advisors to use it because they have 20,000 advisors and they couldn't supervise suitably their use of that because some of them are a little bit more complicated. So that's a little bit about us. Talk a little bit about investing in the current climate because that's what we do. And some of you would be disappointed if we didn't even talk about it at all. But this is the S&P 500 prediction from about 20 different companies, market strategists for the year 2024. Okay, so again, you know, Goldman Sachs, Deutsche Bank, JP Morgan, all the usual suspects, where their prediction for where the S&P 500 will end the year of 2024. So when they wrote this at the start of the year, it was around, the S&P was around 4,800. Today, as I look, it's actually approaching 5,000. So we're up over 4,990. But nonetheless, when they wrote this, they predicted that the S&P would end at 5,200. And some of them said all the way down to 4,200. So some of them were saying a loss of about 15%, and others were saying a gain of about 10%. So this shows you the wide variation among all of those different groups. So part of the rationale for this is that we're still expecting a mild recession. And that's what a lot of the strategists that we follow, especially the ones over at First Trust, say we're going to have a mild recession. A lot of reasons for that. High market valuations right now, but really it's the inflation that's been built into the economy over the past couple of years. That's still built into the prices. That never actually got taken out of the prices, even though inflation has come down. That just means that the rate of growth has slowed, but still all of that, the increases in the prices are still built into that. So that is going to impact consumer spending. And they're saying that's going to happen this year. Okay. So that's part of the justification for it. There's other reasons as well. Another one would be that all of the money that the government handed out to us in the form of free money and free loans has all been spent finally. And so I was a little bit surprised by that because I thought that would have been spent like 2 years ago, but they're saying it's really just happened here recently. And so now we're going to see the impact of that on consumer spending. So again, they're talking about a mild recession. Your run-of-the-mill recession is about a 30% pullback in stocks. So if you were to look at the last 8 recessions, that would be what we experienced, about an average of 30% pullback in stocks. So a mild recession, I don't know, maybe that's a 10 or 15% pullback in stocks. And that's certainly consistent with some of the more pessimistic of these strategists here. So again, the way we're approaching that is just make sure our clients have the right type of portfolio for their risk tolerance, but also we've got some strategies that provide 10% downside protection or 20% downside protection from a drop in the market. So you experience no losses for that first 20% or that first 15%. And the cost for that is that you just don't make as much if the market were to go up. But it's fully liquid and people really like that. This is a chart, a historical chart showing you the growth of the S&P 500. And that's what we use as the market, the S&P 500. I know on the news, you always hear about the Dow Jones. I don't really understand why, because that's only 40 stocks. So we always, in the business, we always talk about the S&P 500 as the market, but you can see just the phenomenal growth. This is 1970. I apologize. This is all very small, but if you like later, contact me and I'll be happy to send you the charts. 1970 up to the current year. I was born there, so I can tell you that's 53 years. And just look at that growth, okay? And what we're showing here, you can't read the words, but these are all just different crises that occurred over the last 53 years, okay? Black Monday, 1987. Anybody here an investor back in 1987 that remembers that? I was 17. I was in my dad's office that afternoon after school. By chance, I almost never did that. And this was going on, and he was losing his mind because he happened to be recently investing in the stock market quite a bit, and it was down about 20% that day. So that was interesting time period. Of course, we've got 9/11/01 right here. Just a little bit before that, the tech bubble crashed, and the NASDAQ and all the tech stocks went down quite a bit. Here we've got 08, the financial crisis, right? We all remember that. The market was actually down 51%. At one point during 2008. It ended the year minus 35, but it was down 51%. Okay, so, anybody here, if you've got, $1 million portfolio, imagine that being down, 51%. It's a little bit crazy, but that's here, and look where we are here. Okay, so why do I show this? Why do I love this? It's because it just shows you that you got to stay invested. Okay. I've got studies in my office that show you if you invest over a 10-year period and you invest in stocks, in 95% of the cases, you will have more money left at the end of the 10 years than you started with. Now, it might only be $1, but sometimes it's 2 or 3 times the amount that you had in there, 200 or 300% of what you had put in there. Okay, so 95% of the cases. So the stock market is not broken. We can get worried about all kinds of things. We can get worried about government debt. We can get worried about the crazy guy in North Korea. We can get worried about a war with Iran, which may or may not be happening. There's a lot of things we can worry about, but there's nothing that says the stock market is broken. It's not going to do what it's done for 100 years. So stay invested. I want to talk a minute about bonds because we've all heard interest rates have risen from nothing to 5.25%. So you can actually make money safely now. While this was traumatic in 2022, both for our stocks and our bonds lost 13% in value that year. That's because when rates go up, the value of bonds go down. You've probably heard that. But now it's a good thing for anybody who is actually retired or in that retirement red zone. Most of our clients 5 to 10 years from retirement, because we can make money safely. And what I love about this, a lot going on here, but we're just going to focus up here. This is showing us that over the last 8 periods in history, when the Federal Reserve has raised interest rates, as they've just done, okay, then this is how bonds performed, a meager 2% during that period. That's actually better than what we've experienced. However, the 2 years after that, they have averaged 12% per year return in the bonds. Now you're getting that 2 ways. You're getting the interest payments, which are, 4, 5, 6%, and then you're getting the growth in the bonds value. The bonds go up. People start to favor them and they buy more of them, so they appreciate in value. Those are 2 different ways that you get that. But what does this all tell me? We're about like right here. Okay, the Fed is done raising rates, and so I think bonds are going to have a good couple of years. So just a little fun fact. Let's talk about financial planning for a minute. I probably showed this when I was here 6 months ago. Again, different crowd, but I love this. Has anybody here heard of Ron Blue, financial planner and advisor? Ron Blue. He is a famous Christian financial planner and advisor, and he came and spoke in the Triangle at the Summit Church about 5 years ago, and I had the privilege to go see that. And he gave us this information and said, go and use it. And I just thought it was fantastic. Every dollar that you spend goes into one of these buckets. Okay. So living, right? Living, paying the mortgage, paying the utility bill, eating, paying for the car, giving, growing and saving. We love growing and saving our money, right? Owing taxes, owing in debt. Live, give, grow, owe up. So think about that. Every dollar you spend goes in there. I just love this because now I think about, wow, if I reduce what I've got going into my car, I can actually save more. And that's what I like, right? I want to know that, the Kevin 20, 30 years from now has good financial stability, financial peace, right? Or I can give more and experience the joy of giving, right? Different things I can do. So that's what I love about this. And so the thing is, you want to figure out where you are, right? Hopefully you're over here, right? Because debt, the problem with debt is that it puts a constraint on our ability to do anything else. Spend, give, grow, right? So, people think, oh, I can use debt and I can do more of this and do more of that. It actually puts a constraint on it, okay? And so we want to reduce debt and grow and save. So that's the principle that I use when I'm working with clients is reduce debt, live below your means, invest and save and grow. I do want to talk a little bit about the S-Corp because that's the theme for today. So I said, hey, what's the best investment vehicle for someone who has an S-Corp and is an individual? And I submit that is the individual 401k. Now, this is different from a 401k, which Susan mentioned, which is expensive. Those can be, when we price those out for different clients, about $5,000 a year just to start and $3,000 or $4,000 a year to maintain because of all the administrative costs. But an individual 401k, also known as a solo 401k, this is a plan just for a one-person company, business owner, but you may also put money away for your spouse. These are free to open and free to maintain on an annual basis. We do these with Charles Schwab where that's all free. It's as simple as an IRA. I really, really like these. By the books, they allow you to put away as much as $69,000. That's combined for employee and employer. The employee can put away $23,000. And then if you're age 50 plus, catch-up contribution, so $30,500 you can put into your individual 401k. And that's the same as a 401k. So if you were one of these W-2 employees that worked for a company, this is what you would have available to you in order to put away tax deferred into your 401k. Now, the employer piece of that, which would be the balance of that to get you to that number, that's a function of how much profit your company makes, and it's a complicated formula. We'd have to get Susan to help us do that calculation. But that for those that have a really high earnings, it would enable you to ultimately get up to that number. Okay. But even if it's just a few thousand, based on your current profits now, still we're already talking about putting away $30,000 a year. So you can do some serious saving for your future self with $30,000 a year. Okay. The taxes are deferred, so you're not getting away from taxes, as Susan alluded to. The government's going to get it eventually, and so what we are doing is we're deferring taxes. And in finance, we always want to defer and pay later, right? Time value of money. So you're gonna ultimately pay taxes from this, just as with any retirement plan like an IRA or a 401k. When you take money out after age 59 and a half, you can make a withdrawal with no tax penalty. And then once you get to be age 73, you have the required minimum distributions where the government says, hey, you've had that long enough, it's time for me to get my piece. And they force you to take out 3 to 4% from that account value. And then you experience that as regular income. And that's when you pay the taxes on it. Okay. But then once this money goes into an individual 401k at Charles Schwab, Fidelity, or wherever you do your investing, you can just invest that into mutual funds or ETFs or individual stocks, any way that you like, and set that up for long-term investing. Does that make sense? Sorry, I'm talking so fast. I'm not a fast talker really. But does anybody have any questions? All right, well, just throw up a hand if you do have any questions. But just to make that point perfectly clear, right? If we put $30,000 into the I-401k, again, I don't give tax advice, but we can try to make some assumptions about how beneficial that would be. If you've got a effective tax rate of around 20%, you're actually going to save about $6,000 on taxes this year. Wouldn't that be nice? Right? So really, really powerful here. Susan mentioned that if you're just an individual and you're just investing in an IRA, that limit's around $7,000. Okay, so that's one of the reasons that you might want to set up a S Corp, is that you can put a lot more into your retirement through a strategy like this. Another one would be a SEP IRA. That's something that's suitable for someone who's got more than just one employee, right? So I have an S Corp for my business. I'm just one employee. But if I have someone who worked directly for me and was a part of my business, and some of you agents may have that, then a SEP IRA might be more suitable. Okay, doesn't allow you to put away quite as much, but still about twice, a little bit more than twice what you can put in a regular IRA. Make sense? Super simple to open. You can go onto the IRS website, get your EIN, and then you just need a business name, which you can make up. You're going to have that from your LLC and your S Corp documents anyway. Then you just put that on the form. It's just like opening up a regular IRA or other investment account. Super simple. The other options here, everybody's heard of the Roth IRA. These are really, really powerful because you'll never pay taxes on that again. You also don't have the R&Ds. This one is interesting. Self-directed Roth IRA. This allows you to own real property in an IRA, in a Roth IRA. Okay, so I have clients that own property in their Roth IRA. They make $100,000 on that property, when they sell it, that gain, they're not gonna pay taxes on that because it's in a Roth IRA. A lot of people don't know about these. They've been around for about 30 years. They do have some wrinkles that make them a little bit more difficult to administer. They're slightly more expensive to maintain on an annual basis, but can be a really, really powerful thing. One thing to keep in mind here, if you're the type of real estate investor that likes to do fixer-ups and you like to do the sweat equity, you're doing the painting and all this, that's not allowed in this. So it has to be a pure investment. You're gonna have to actually pay someone to come in and do the painting and everything like that. But for a long-term strategy and accumulation, that could be really, really powerful. Any questions about that? All right, so my advice would be just get started, make that saving and investment plan, and make sure you know where you are on that pie chart of live, give, grow, O and O. You can start a new individual 401k or SEP IRA, and you can certainly should review your current investments as we get ahead of what could be a possible recession. Make sure you've got the right risk allocation there. And definitely, if you don't already have one, get a personal financial plan so that you can see, what you're on track for, right? You're going to be growing your contributions here and growing your investments based on their earnings, and then you're going to retire. You're going to start pulling some out of your nest egg, and you want to see, is that money going to last until I'm 80? And then I'm on Social Security? Or is it going to last till I'm 90 or 100? What am I looking at here, right? And so the more we can do on saving, we're going to set our future self up for more success, okay? I brought a couple of newsletters here. I have a bi-weekly newsletter that goes out. If you want to get on that, it's a great way to just get some good information. We have articles that come out from the Wall Street Journal, Barron's, the New York Times, the Financial Times, and all. So I could be happy to add you to my newsletter there if you want to just drop a business card here or put your email address on that. And then also, if you'd like to have a complimentary consultation, I do what's called an Ask Me Anything meeting, which is a complimentary sit down, 45 minutes. Let's just talk about who you are, where you're from, what your goals are, and see if there's any way we can add value to your situation. If there's not, then we'll try to point you in the right direction. And there's no obligation or anything like that. But you'll definitely learn something in that meeting, and I would enjoy the opportunity to get to know you a little bit better and see if we can help you. So, yes, ma'am.
Is there a maximum contribution SEP IRA?
Yes, and that is, I think it's 17,000 for 2024. So the SEP IRA, it has a slightly lower amount. That's why I typically start with the individual 401k. But if you have an employee, then you'll need to use the SEP.
Even without employee, of course.
You can use the SEP for a one person as well. Yep. Mhm. Any other questions? Thank you so much. I appreciate your time.
Thank you. So that is all we had to share today. These professionals are going to hang around for a little while. If you have any questions that you don't want to ask in front of the group, I would be remiss if I had all of you in the room and I didn't remind you of a few things that I spent a lot of time planning for y'all. So just so you know, we have the chili cook-off coming up on the 13th. I also hear that the new coach, Ed, that was just added, is going to be putting together a class for us that I'll have more information on shortly. Team meeting on the 14th, following that a home inspection class. I'm teaching a class on command on the 15th. I hope to see a lot of you there. Kat is teaching a class on just the headshot editing portion of Canva. Not to be overshadowed by Taylor coming a few weeks down the line. She's going to be teaching a full Canva class. And our very own Stephen Burnett's going to be teaching about FSBOs. So, and the last thing I want to say before I let y'all go is we're having a seller seminar. And Wendy's Agent Development Committee, as well as Marsha's DEI Committee, is coming together. We are going to be doing a letter writing campaign, mailing it to sellers, and inviting them in for a seller seminar rather than a hold down seminar. So please support that. Use that to your advantage. We do 90% of the planning for that stuff, so it is here just for you guys to use. Come, mail some letters. Everything will be presented for you. So unless you want to help, because you can always do that. We're very open to that as well.
I'm concerned that I hope they don't sell on their own once they get at that meeting.
You know, we're not gonna teach them to do that. We're gonna teach them the importance of what role we play in being a fiduciary.
So we have a-
We'll present them with enough information so they understand where we fall. But thank y'all so much for coming, and thank you guys so much, Susan, Kevin, and Josh. Appreciate y'all very much. No.
Yeah.
I can't serve two masters, I can't record and. I share notes.
Yeah. Yeah, I need to reach back out to him. I know that. Yeah, I want to give him a little bit of time, because I'll give you a transition over to that new investment group. And advise them.